everyone. This is Melody Bell, founder and CEO of Financial Beginnings, and we're wrapping up Financial Literacy Month in April with our final webinar of the month. And really excited about this conversation, kind of a special, I always have special guests, but I have an extra special guest this time that we're going to be talking about financing college and something that is resonating with myself right now and my guest. My guest is David Bell. He's Deputy Director of the Oregon Treasury Savings Network, and the name is no coincidence. He is also my husband, and so it's really fun because it's not many times, even though we kind of operate in the same spheres, that we get to operate together. So thanks, David, for joining me. And can you please tell me a bit about the Savings Network and how this pertains to the topic today?
You bet. Hello from clear across the room. We are actually in the same house right now, even though we're recording from different rooms.
We're socially distancing.
That's right. So the Oregon Treasury Savings Network is a division of the Oregon State Treasury. So we oversee 3 different savings plans. The one that we're going to be talking about today is the Oregon College Savings Plan. We also oversee a savings plan called ABLE, which is helps people who experience disabilities save money without getting kicked off of their vital benefits. And then our newest savings plan is called Oregon Saves. It's a retirement savings plan for people who work for employers that don't offer a savings plan. And it's very relevant.
It definitely is very relevant. And this is an excerpt from our Pathways curricula. Also, we cover some of these topics in our which Pathways is for high school. We also cover some of this in our SAFE program, which is for college students. So, normally we're talking to high school and college students about this, but, in these times and days, I think that this conversation will also benefit parents such as ourselves that are going to be, maybe grappling with some of these topics. So please, this is a great opportunity for you to subscribe to Financial Beginnings' YouTube channel, as well as share this with individuals you think might be interested in it. So with that, let's talk about financing college and to put the more personal spin on this conversation. We have a daughter who is a senior in high school and is going to be looking to move on. And so, we are helping her out a bit with school. We did set up a college savings account when she was younger. And so, with that, her understanding, our contribution towards that, she also is saving up her own funds to be able to supplement some of this. But going back to the college savings we established when she was young, how do we look at choosing a college savings plan?
Well, first, maybe we should describe what college savings is, because you can literally save for college in many places. I wouldn't suggest it, but people could save money by putting it in a jar in their home, although that's not a very safe place to save it. You can open up a bank account and save money there. There's a lot of different methods for it. A lot of people choose what's called a 529 savings plan. That's just a tax code. It was set up in the late 1990s to allow people to save money specifically for college. And that doesn't mean just a college or university. That could be a community college. It could be trade school, now apprenticeship. So basically any education after college. And the federal government set it up, and states now have their own plans, because then the federal government offers some special tax incentives for saving there. And many of the states offer tax incentives as well. And so when you're looking to save for college, maybe take a look at what your state has to offer. Here in Oregon, we have one called the Oregon College Savings Plan. And not only do you get some federal tax savings by contributing money to it, saving for your kids' college, or could be your grandkids' college, but you also get some state tax incentives as well. So basically the state and the feds are helping to pay you or allow you to have some extra money to be able to save for your higher education. Look to your states. Other than that, there's a lot of great ways to find saving opportunities for college. There's a great website called savingforcollege.com, allows you to compare all of the different states' 529 savings plans.
And one of the advantages of that is that, I know your family lives in California, and they sometimes contribute to our kids' education. And they don't have a state deduction there. We actually get to reap the benefits of that deduction.
Yeah, it's not too bad. Yeah, the state of Oregon has a state tax deduction, which allows you to save some money on that. And actually, we just changed it, like many other states, to have a tax credit, which even gives more of a tax incentive for people to save money. Anytime someone's going to help pay you to save for your kids to go to college is not a bad thing. Now, take a look. Take a look. It's a good opportunity.
Now, what risks though might I have? I mean, so I would love to think that our children get full ride scholarships, and I don't even need that college savings. Then what?
Yeah, me too. I hope that as well. So this is a common question many people have, and it's actually a reason why some people have chosen not to save for their college through the 529 savings plans. But even if they do, there's some safeguards there. So the college savings plan, when you open an account, so actually the accounts are owned by you, Melody. So you are the account owner. So that those funds stay with you unless you decide to give them to our kids who are the beneficiaries. So let's just say our oldest daughter gets a full ride scholarship. Well, we could transfer that money to our youngest daughter, or we could hold it and have that go to her kids if she has them for their college education, or she could use it for advanced training and let's say extra degrees. Or if she just wants to take the money out, you can take the money out. That's your money. If you get a full ride scholarship, you just take that money out. You will have to pay those tax savings that you got because you're no longer using it for education, but there's no such penalties. If you do pull the money out and you didn't, the child didn't get a scholarship and you just want to use it to buy a new car, you have to pay those taxes because you're not using for education anymore. And then there's a 10% penalty on just the growth, but all of the money that you put in there and a lot of the growth is going to be yours regardless.
Perfect. And, we're looking, that's just one form of it is that, we're looking at the savings. And so it can be, our saving towards our kids' education, me as an individual. I mean, I put myself through college via, working and different opportunities is with that. And so, we're contributing monthly towards our girls, college savings. And early on in high school, we had this conversation with our oldest that, here's what we're able to contribute to your education. And I think that was actually a really important thing is that we had this conversation with her early on. We didn't want any surprises, the spring of the senior year on what we were able to do. And so it's not covering it all. And so there's other aspects that we actually have to look through. Now, unfortunately, she does not qualify for grants, and we'll delve a little bit more into what qualifies with that. We are fortunate that she's been a great student and has gotten some really great scholarships, but ultimately there's still going to be a gap for her that she is going to be filling with loans. So tell me, I mean, I like to start with the things that I don't have to pay back, right? And so, what are those opportunities for her to be able to get funding for college that she's not going to have to pay back? And scholarships is a really great opportunity for that. And so what suggestions do you have for a student who is looking for scholarships for college?
Oh, there are hundreds, if not thousands, maybe millions of scholarships out there for everything. I mean, there's just random scholarships. There's scholarships made just for left-handers, which our oldest daughter is a left-hander. There's scholarships for individuals who fit into a very special class of individuals. There's scholarships from your local community. The thing is, just look out there. You can Google for local scholarships or scholarships that might fit you. Also, a lot of states, if not all states, will have some form of higher education commission built into the state, and they will funnel all of the scholarship opportunities into one area. In fact, the one here in Oregon, you can apply to one scholarship application that opens it up to hundreds and hundreds of opportunities for you. So make sure to take a look. There's also one that our daughter is using right now. Do you remember it off the top of your head?
Yeah, it's Going Merry, but Merry like Merry Christmas, .com. And so that's a really great opportunity that able to type in all those different traits, via, where the profession she may want to be to the, being left-handed to all of that. And it will plug out several different opportunities for her to be able to plug into. Now, I realized that it was a little too easy. And so when we were setting expectations for her and applying for scholarships, she was like, oh yeah, I applied for a ton today. I was like, oh wait, that was like a little too easy. So we had to kind of ramp up those expectations a little bit.
Oh, it's absolutely. I mean, honestly, there's a lot of great opportunities out there. It's going to take a little bit of time, right? To be able to sit down, find the right ones, apply for them. A lot of them will have a lot of the same characteristics, but there's different aspects. But give yourself that time. Even if you're just getting a $200, $500, or $1,000 scholarship, you start adding those up and it's real money. That's money that you don't have to then borrow, which I know we're going to talk about here in just a minute.
Well, and I got a local scholarship from the pub in my small town that I grew up, and I always, say they saw my potential, and yeah, it's amazing where you can be able to seek those funds. When we're talking about grants, this is also something you're not having to pay back, and so when we're looking at grants, this is where we need to actually plug in and start filling out some forms of us as parents, and completing the FAFSA. Now, the FAFSA did change a couple of years ago, and it was really for a positive. It used to be that you would go in January and you had to estimate what you think the taxes were going to be from the previous year that you had filed. Now what's really great is you get to go in October, and it links directly to the IRS and is going to pull in your tax filing information from the previous year. So you're not having to, do this estimate, go in and correct it after you file. It makes it really, really easy. And so you definitely want to do that, right? Is to fill it in.
Oh, no, you do. In fact, you need to. In fact, there's many different grants and even some scholarships that you won't get unless you filled out the FAFSA. And you and I have been talking about FAFSAs with students and with parents for many, many years, but this was the first time we had to do it ourselves, and I was still a little nervous. And honestly, I think we got through it in no time, but you want to do it early. So if you think that you're going to qualify for some funds, the earlier you get your FAFSA filled out and you get your quote unquote, your score, your FAFSA score, the quicker that you can have access to some of those funds, because those funds do dry up. So do it early. And they did us a favor, like Melody said, they changed it. It used to be on January 1. So some families were having to spend their New Year's Eve filling out the FAFSA. Now they have it set to where it's in October, makes it a lot easier and a lot more streamlined.
I do know this year I was a little bit frustrated because I went in, I was the great parent doing it the first weekend after October, and the IRS was doing a maintenance update. And that was a little bit frustrating, but definitely it puts you in that virtual line, and you do need to get into that line as quickly as possible. When we're talking about then the gap, so when we're looking at it, it's kind of the last form of the equation. And, I know for me, like this really affected my decision in my education path was the loans that I would be taking on to be able to do that. And so when we're talking about loans, one is understanding, okay, what is that gap? So we don't necessarily need to just take out what is being offered to me, but as a student, how can I possibly fund that gap? Do I need as much as they're offering? Because sometimes they even offer more loans than we need. And then how much is that loan going to cost me? Just like with any loan, it's important to understand what is the longer term cost of my taking on this debt. And so for students, one of the things that I really like to focus them towards is understanding the difference between subsidized and unsubsidized loans. So when you're talking about the subsidized loans, the really cool aspect of this is that you're getting the loan and you're not actually charged interest for that loan until after you're out of school. Now, this is a needs-based loan, whereas unsubsidized loans, you are actually going to be accruing interest while in school. Now, you do have the option that maybe it's working over the summer or somehow factoring into your budget, that if you don't want that loan to be actually more than what you took it out because of the interest while in school, you can be paying for that. Now, other supplements is, we as parents actually do have the opportunity to be taking on loans that we are responsible for. Whereas, when we're talking about direct loans, those are the student are responsible for that repayment. And so when you're thinking about that and parents are considering taking on loans for their children's education, what would you recommend for parents in determining that and weighing that?
Yeah, I always shy away from trying to tell people what they should and shouldn't do because there's so many factors to come into play, but there are some key indicators here that you should take into consideration. So for one, let me just, before I even answer that, let me just kind of reverse a little bit. If you do have the opportunity as a parent or a family member or a very good friend to be putting money aside for a child when they're younger, it's a lot easier to save money over time. What you do want to make sure, though, is that you have your own finances in place. You want to have an emergency fund set up. You want to be able to put money aside for your retirement because we're all going to want and need to retire. And if you still have some money left after that, after those two priorities are in place, if you can put a little bit of money aside, do it. It could be as little as $5 a month, or it could be just a one-time $25 here or there. It really adds up over time. Now, if you do get to this point in the equation, and many of us are right now, where you're trying to consider whether you're going to take out a loan, a parent taking out a loan for their kids, again, I'd say the same thing. Make sure that it's not going to jeopardize your own finances. There's other ways for that student to go ahead and get some funding to go to that college, to choose a different college. I know there's a real decisions that they have to make, but do not jeopardize your own finances just to take out a loan for your kid to go to college. If though you have your emergency fund, your retirement's in place, and you are in a spot where you could take out a loan and you have a plan to be able to pay that off, then I'd say it's not a terrible idea, but you want to do your research, understand what that loan means, and understand what it's going to take to pay that off.
And it's really hard as parents, and especially, like I said, with my situation, because I financed my own college. And so, you want to give everything to your children, and you want to, I will bend over backwards to make this happen. But then I'm also, I'm a product of my experience and have that. And, I appreciate that I, worked through college and I financed that, and something I'm very proud of. And I definitely would not want to jeopardize, my own retirement and my own future just because I want to give that opportunity that maybe, I didn't have. And so I think as parents, it's important to understand that. Now, one of the things that's really cool and we are going through right now is you get these financial aid packages that start coming in. And what does this mean? How do I do this? How do I make this an apples to apples comparison? And so when we're talking about a couple of great sources, one is the Federal Department of Education. They have amazing resources when you're talking about financing college with, everything we talked about today. We utilize, we source them in our curricula a lot. Now, CFPB, the Consumer Financial Protection Bureau, is also another great resource for that. And they have this toolkit that's really great to go online. So you can actually go online and they have a compare financial aid college costs. So just CFPB comparing school costs, and you should come up with this pretty quickly on the top of your search engine. And they make it just really easy as these financial aid offers are coming in. Now, here's the cool thing is our daughter would have to be making this decision this week normally. She would have to be declaring, and actually I kind of wish that was the case. She keeps telling me not to worry about it. But because of COVID and what is going on right now, most universities are delaying that decision another month. So she has until June 1st to weigh through all of this information. So as you're getting these financial aid packages, it kind of seems like garbly-goop. I mean, it's hard to understand with that. And so this is really great to be able to provide this apples to apples comparison. So you can go in here, and I already put in the example of Oregon State University, and it automatically, if I add a school, you go in here and you can search for the school name. So let's say University of Oregon. So should she be a duck or a beaver? And with that, University of Oregon does not come up at the top. There we go. Am I a resident? Am I going to live on campus? Because that's going to factor into the cost of that. Am I an in-state student versus an out-of-state student? And so you answer these two simple questions, and it's actually going to pull that information. So it's going to show you, okay, University of Oregon, their costs are pretty comparable. They're about $26,000 each. Then you can start to fill in the information though on how much have I as a student saved, how much have my parents saved towards this, do I get scholarships? And so if I had academic scholarships, then I would be able to include that here. Looking through if there's loans that are offered, okay, there's just the subsidized versus unsubsidized. So here we've got 5,500 in unsubsidized loans. So it'll show you then, okay, here's your cost of school. Here's how much you've been able to do this through the contributions and the savings that you have, the scholarships that you have, the grants and the loans, and then if there's anything left. So I got this kind of netted out at zero. And with that, it's going to then calculate those loans and show you what that payment is going to be outside of college. So with that, it says, okay, so over that 4 years, you actually would end up with about $25,000 in debt at graduation, and your payment's going to be $272 a month. How is that to swallow, right? And so it's a really cool opportunity to spread this out, be able to kind of cipher through all of that information. Something that apparently we're going to be doing on May 31st because, our daughter's not going to make that decision until June 1st.
The big thing here, and I think you're showing it, is make sure you know what you're getting yourself into. Whether you're the student, whether you're the parent, having this information at your fingertips so that you can plan accordingly is the most important aspect.
Well, David, thank you so much for joining me for this conversation. Before we part ways with this and actually, end up going to dinner or not going to dinner now that we're in COVID, but with that, do you have any parting words for individuals? And I would love to hear too, if there's anything in response to COVID specifically that the plan or the network has as resources that you'd like to share.
There is not enough time to cover all of the things that the plan has had to do to make sure that we're responding properly to COVID. And I know that plans across the United States, banks, financial institutions, colleges, universities, they all have contingency plans and continuity plans in place for COVID. Some things that we've had to do is we've had to relook at our investment lineups, which have actually held up really well in these downtimes because we constructed them knowing that there's going to be downtimes and uptimes. There are, sending people to work from home, and that's not just people like myself that are kind of oversee the plans. They're the call center representatives and more. So when you're looking at your institutions, your banks and such, know that your money and your savings is in good hands. They have plans for this. But the parting words on this is it's just exciting. And it can be stressful. Don't get me wrong. It has been for you and I, Melody, throughout this process. But it is exciting for paving a way for our kids, or maybe you are the kids themselves, to be able to go to college. And that may look like a university, might look like trade school, apprenticeships. So many exciting things that you can be able to pave the way to be able to reach your dreams. So I'd say don't shy away from it, embrace it, do your research and know what you're getting into so that you can have a plan for your future.
Yeah, I know I felt very comforted in looking at our college savings plans because we're going to be writing a substantial check out of our college savings plan this summer. And it's interesting seeing we have the 18-year-old and we also have an 8-year-old. And because we chose that, target date in the sense of, based on when they're going to be going to college, the loss for our 18-year-olds is very minimal because of the investment line with that.
Yeah, very, very minimal. And so I know that investing is not the top of mind for many people out there, but when you're getting into these types of plans, there's so many options and a lot of research that went into it and a lot of ability to kind of help you choose the right option for you. What Melody's mentioning is in Oregon, we have a very innovative target date plan. So instead of target date of when you're going to retire, it's the target date of when your kid is going to start college or when you, the child, is going to start college. And as that child gets closer to going to college, the investments get much more conservative. And that has served us extremely well in this time. Whereas our younger child is a little farther away from college. She's a little bit more aggressively invested because she's on that path, but at a different place in it. But that's okay. We have time for the market to rebound there. And so don't let choosing an investment within one of these plans hold you up, because there's a lot of great ones out there. And these target or age-based are great ones for you.
I'm just choosing not to look at the youngest right now, and I think that's a strategy to go with that. So.
Good idea.
All right, well, this wraps up our webinar series for Financial Literacy Month, but we've had a really great return in interest in this series. So we are going to be continuing this into May. So please be watching. Later this week, we are going to be launching the lineup for the May webinar series, continuing to wrap go out on Wednesdays. And thank you all so much. Again, subscribe to our YouTube channel and share this information. Thank you, David.